Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing some selling pressure once again today. 10-year note futures coming off an uptick yesterday, but now trading lower 3 out of the last 4 sessions. And today we're looking at the futures market trading back down into that 107 handle. 107.24 is where the futures market's currently priced, and that's pushing back down towards the recent lows, which also correspond with the lowest levels since November. So some selling pressure here today, and I think some of the driving factors are data points this morning. Philly Fed data points highlighted by manufacturing, indicating that manufacturing picked up for the month of March, as well as prices paid in their prices paid component. It was a big increase over last month, higher than the expectations. So I think that that's one of the primary driving factors today as to why we're seeing some selling pressure. Also, several Fed speakers continuing to reiterate the fact that inflation is a challenge, and they expect to continue to combat that inflationary environment before they think about lowering rates, which may or may not come later this year. The other dynamic in the market today, though, was the auction of 5-year tips. We did see an auction of the 5-year tips on the heels of yesterday's 20-year bond auction, and strong demand once again today. So last week we had some of the auctions with some soft demand. This week we've had 2 auctions so far with very strong demand, so I think that that's at least offsetting some of the selling pressure. But nonetheless, the data points seem to be influencing the markets more so today. And looking at the yields, 10-year yield is up 6 basis points today to 464.5 basis points. So we're moving back up towards that top end of the range, as I mentioned. We did see the yield top out at just shy of 470 basis points a couple days ago intraday, but still holding here in this 460 to 470 range. And so that's the top end of the range going back to last November. And the yield curve as well is moving higher today, and particularly in the middle of the curve is where we're seeing the heaviest selling pressure, moving those yields higher. When you look at the 2s, 3s, 5s, 7s, and 10s, we're seeing those higher by 6 or 7 basis points pretty much across the board. And in the tail ends, we see a little bit less selling pressure, but overall, the yield curve is shifting higher, with the 10-year note now selling off after a higher session yesterday, moving back down towards those recent lows, which correspond with better than 5-month lows.